Returning now to our top story, the deal done in Brussels in the early hours of the morning on the European debt crisis. Joining us now from London, Lee Robertson, the chief executive of investment firm Quorum. Lee, this is hardly the ambitious and comprehensive response to the debt crisis that we were promised, is it? It's just a raft of compromises, surely.
I think I would probably agree. I mean, I think it's definitely more than the markets hoped for, but it's nowhere close to what the markets really wanted. I think it is a series of compromises. I think it's designed to deliver stability to the markets, to let people calm down. I'm not sure that it's going to go the whole hog there.
Let's pick it apart as far as we can here. The headline numbers, they look impressive enough. The devil, though, in the detail, much of which is still to be thrashed out. I mean, will the ECB be on board, for instance, in this plan to leverage the European Financial Stability Fund? Surely that's just all smoke and mirrors, isn't it? We're creating money again.
I think we are creating money again. And this is the big issue that we have. Whenever one talks about defaults, and there is a potential for default throughout southern Europe, starting with Greece, but the eye of the storm may move on to Italy. There's either the typical default, which leads to massive scarring through recession, or you do it the other way through hyperinflation. And some of our German colleagues have been through that before, and they don't want to do through it again. So I think you're absolutely right.
And this requirement then for investors, private investors in Greek debt, for instance, it's a voluntary agreement, isn't it? Are they going to comply?
I think they will comply at 50%. I know that the Germans and the French particularly wanted 60%, but at the 50% level, it will be voluntary. So I think they will bring people along with them on that.
So do you agree then with the French finance minister that it's by no means a perfect deal, but at least it is the beginning of the end of the European debt crisis?
I'm not sure I do agree. I think part of that statement is right, but I think it's just the beginning of quite a lot of trouble. I have the feeling all they've done is push this back over the horizon a bit, and they've not dealt with it fully. I mean, these are eye-wateringly large debts throughout Europe, particularly throughout southern Europe. Massively above GDP. If we look at Greece, it only by 2020, it only brings their debt level back down to 120% of GDP. I don't think we're anywhere close to getting to the bottom of this yet.
Lee Robertson, good to talk to you. Many thanks indeed, sir.